I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick. I understand you had a little bit of a tangle with the ski hill, but somehow you're still soldiering on.
I had collision on the Colorado slopes, and I thought I was doing well over the years to learn how to ski well enough so that I could ski till I was 75 or 80 and not worry about falling. But what I should have been worried about was colliding with someone, and I wound up with a leg fracture and some torn ligaments, and it's no fun. Yeah, you just don't heal like you did when you were 20.
What about the markets right now? Are they breaking a bit after having record highs set in the Dow last week?
Well, I put out a note this morning that the recent rally high failed to hit a certain threshold that I would have expected to hit if the bull market were going to keep chugging along. Let's just say it hints that the Trump rally may be suffering some fatigue here. And yet when you come in the next morning and expect maybe a 2-day sell-off, God forbid, it doesn't happen. It's like they can't sell this market off. It just hangs tough, and I guess it's all of that funny money in institutional hands.
How big of a deal is this? Are other investors now deciding that they're going to, I guess, chase the dragon?
Well, it's always a disconcerting sign when you see a story in the Wall Street Journal about the public is back. The stock market has been, since the bull market began in 2009, a total institutional creature. They all kind of hang together. They buy the same themes all the time. They rotate and allocate capital the same way. They all sort of think like one grass-chewing cow. And so now we've got supposedly the little guy going in, and I guess that should make us perma-bears a little bit cautious about how much of a blow-off we could have if, in fact, the little guy really is back.
If that is a factor, what should investors really be looking at?
They should be looking at the lowest possible yielding vehicles they can find, because those are going to be where the safety is. And obviously, a collapse of U.S. stocks would send a great deal of money scurrying into long-term T-bonds and Treasury notes. So I would look further out the yield curve for things that seem to be yielding nothing, because they will automatically be the places that will turn out to have been safest.
An interesting thing, I was finding gold is down as we're speaking, and so are the major equity markets. Usually they tend to go in opposite directions at the same time.
Well, when those institutional guys who can't walk and chew gum at the same time, when they get a mind to do something, they just sort of follow the game plan. And, of course, when they're pushing stocks, they all become kind of momentum buyers, and guess what? There's no momentum in bullion. They just sort of ignore it. So it's not a question. I don't think you could say that they're really bearish on bullion. It's just that momentum-wise, they've got bigger fish to fry. So that's what they're doing. And the more I look at gold, I've got a readership that is somewhat enamored of bullion, and I try to give them the good news if the good news is there. But in the back of my mind, going back to 2011. The market, the gold and silver, seemed to rally only enough to keep the perma-bulls engaged, but from my technical standpoint, they never quite get to their targets. There's always a little bit of weakness, and I don't have to tell you how many times bullion bulls have been disappointed since the bear market began in 2011. So, we had a big rally in 2016, tops in July and gives almost all of it back, and we start this year with another encouraging rally. But I say encouraging now in the way of meaning we're just getting kind of strung along.
How long do you think the market's going to hang around here? Some people say it looks like kind of a rounding top.
I don't see a rounding top for the most spectacular U.S. bull market in history. I think it deserves a fitting blow-off, and that's what it will get. I just have trouble. I mean, I am remembering, the prelude to the October 87 crash. We did have a top in August, came down and then rallied into a lower top, and that's where we sold down. But especially with the public reportedly coming back into the market, this market's not going to simply roll over. And we've had enough steepness in the broad average rally, the broad averages, that it already is, well, let's just say it's getting into blow-off territory.
So when it decides it's going to seek a lower altitude, we'll be well aware of it.
Yeah, well aware and probably a day too late. Nobody's going to short the top of this market. That much I can promise you. And I'm in a profession where I know 100 guys who keep trying. I did myself with the Dow a week or so ago at 21,049. That had been my rally target since November. And I tended to take myself seriously because I'm as bearish a bull as you could have found out there. So it just blew through it by 100 points, and now I'm stuck with the Dow target just from pure technical readings at 21,700, 800, let's call it, which means the Dow's got a 900-point rally ahead of it. So maybe that's all going to be the doings of the little guy.
We'll have more with Rick Ackerman right after the break.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abnresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Rick Ackerman. Rick, if a person was going to bet on whether we're going to see inflation or deflation, what side of the coin should we be picking?
Well, I've been a pretty hardcore deflationist for 40 years, since the publication of C.V. Meyer's book, The Coming Deflation, in the mid-'70s. He was just a bit premature, but not terribly so when you consider that we really had we've had a bull market in bonds since the early 1980s that correlated with a low inflation period. So right now, we've had this reflation trade, and Wall Street and a lot of investors are fired up about inflation. I can't see it, and we don't have enough time really to put it out, for me to put it all out there for you. But there's so many deflationary juggernauts out there waiting to implode, one of which is a pension system that is planning on much juicier pensions than the system will deliver. So there's a pension bankruptcy ahead. We're in the beginning of a commercial real estate collapse. Ditto for housing, because tight supplies have pushed prices higher at a time when mortgage rates have gone up very considerably. So, there's so many things, a big commercial real estate bust just waiting to happen. I don't even have to argue that. If you live near a mall, you can see it. You can see it just by driving over and checking things out from the parking lot. So everything is so precarious, and of course you have to juxtapose it all against this the Trump factor, which is, well, less regulation, lower taxes. But believe me, this market has gotten way ahead of whatever promises Trump will be able to deliver on. And it's just, again, the infatuation of money managers who are too stupid to chew gum and breathe at the same time, and they just get kind of hooked on a theme, which is deregulation, lower taxes, and they buy stocks with money that seems to be an infinite supply.
Well, stock buyers now aren't just investors. They're the actual markets or central banks in several countries. In Japan, for example, the central bank there will be the majority shareholder in the 50 biggest companies in Japan. Can they afford to let the markets go down at all?
Yeah, and Japan, it was always that way. They had sort of an interlocking directorate between the biggest companies there, really, and their whole real estate edifice. So Japan has always been, kind of an institute. The character of savings was completely institutional. All Japanese savings were channeled into institutional buyers who sort of did a lot of log rolling. They bought each other's shares. They supported each other, but it hasn't worked out too well from the standpoint of getting Japan out of deflation. And the thing to observe there is that for all of the problems Japan has had, wallowing for a whole generation, they at least had the rest of they had a robust global economy to export into. And of course, I don't know who's going to be the buyer of last resort when the U.S. is facing similar straits.
Has the U.S. seen the same kind of buying up of stocks, having central bankers decide that's where they're going to put their money? And again, too, pension funds now into equities. If that is hit hard with a downturn, what's going to happen to these pension funds?
Well, the pension funds are sort of factoring 8% long term. They ain't going to get there. Even Soros hung it up when he was having trouble beating 3%. So, there's no question that that Central Federal Reserve funny money has supported this market enormously. It's made it possible for companies, even companies with huge cash surpluses, to go out and borrow money to buy their own shares. And that creates the incentives to do that are overwhelming. It creates a kind of perpetual motion machine where the CEO and a board decide, well, we're going to buy up 50 million of our own shares, and that pushes the stock price up, which gets all of their stock options into exercisable territory. It also provides the bozo institutional guys, the guys who can't walk and chew gum at the same time, with the rationale for buying. Namely, as these companies buy up their own shares, it has the effect of raising the price earnings multiple. You're earning more per share if you shrink the float. So that becomes the fundamental rationale for buying stocks. So when you put all these things together, it really does look like a perpetual motion machine. You think, how can it possibly end? Trust me, I've seen a few bear markets, and we'll have another.
We'll have more with Rick Ackerman right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior. With a proven operator and finance team, Gem International trades on the TSX Venture Exchange. Symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're still chatting with Rick Ackerman. Rick, what's your outlook on oil? It's been churning around the $50 mark now for quite some time.
Well, I think, and I've been thinking this for a year, it's somewhat limited by, if not the implosion of China, certainly a softening of China's economy. China is the biggest. China really sets the price of oil because it's the biggest purchaser at the margin of crude from, mostly non-domestic sources. So oil has been in a long wallow, and I have real trouble thinking that the real economy, the global economy, is going to come alive in such a way that it generates, that it increases demand for crude. And looking at the chart going back to December, it looks like the trend is lower with a lot of, crude has been chopping its way lower, but I think it's really limited by just a relatively soft global economy, and I am just not buying that Trump is going to trigger off some sort of global explosion of productivity and capital investment.
The OECD warns that the economy appears to be disconnected to what's happening in the markets.
Well, for sure. It's really nutty. I mean, you only have to talk to your own friends who have businesses of their own. Hey, how's it going? How you doing? Well, we all know that every one of us who's in business is really, we've been paddling as hard as we can just to make headway against the stream. So the real world, and that's really the oddest thing about this bull market. When you the statistic that's always quoted is that the U.S. economy is 70% consumption, meaning we're like crazy spenders, and yet when you look at the actual conduits of retail business, mainly the retail stores, we're having we're headed into a depression there. Retail, at least brick and mortar retail, is absolutely collapsing. And okay, so we shift all the money from virtually all of the department stores and chains, Kohl's, Macy's, Nordstrom's, even Walmart, you name it. All the investment money should eventually find its way into Amazon. So, but that's obviously not a very healthy retail picture. It's not a healthy, we'll still consume, but we're consuming in a way that is going to lay waste by way of creative destruction to the retail, brick and mortar retail in the USA and elsewhere too. So if we're 70% consumption, and the outlets, the retail vendors that make consumption possible they're all dying, it just doesn't make sense.
Do you think this disappearance of the anchor chain store in most malls happening in Canada eventually as well?
Yeah, and the chain stores, that's a foregone conclusion, but the question now is whether the nimblest, most aggressive and well-run smaller stores, not the big box stores that anchor these malls, but the smaller ones like, the cosmetics counter and the Gap and, Abercrombie, whether they're going to survive. And I think the answer is pretty clear. They won't. They can't. So we really have a virtual collapse going on certainly in the mall sector of commercial real estate, and nothing's going to save it.
Right. And now here in the greater Vancouver area, we've seen the opening of some very large outlet malls. Have they picked the wrong thing to do at the wrong time?
Yeah, and that's the way the developers go. Nothing succeeds like excess, and if someone's got a model that works, they all pile on in such size that, it becomes almost a parody of investment. Here in the small town where I live, they're building something called the town center with a whole bunch of new residential units that nobody who lives here wants. But the commercial, which they bragged about, we're going to have new stores and this and that. Well, it's like another Starbucks. And yeah, I know we needed a Starbucks because there wasn't one within a half a mile, but it's Starbucks and it's a T-Mobile, and there's duplication of this small, the strip mall retail in such fashion that you think how they can't all be doing business, but they put the same places that seem to be doing business now, Mod Pizza, and we're so overbuilt on the burger chains here. It's like Five Guys, Smash Burgers, Red Robin, Big Daddy. It's just, you think, how can all these stores how can they be doing enough business to survive? So that's another part of the downturn that we're going to have, just the amazing excess that's taken place with the commercial real estate development of strip malls.
Well, I've heard that some of the big malls that are having economic trouble are moving high schools into there because some communities need school space, so they're taking over retail space.
That's going to happen. You're going to see, I'll call it the civilian conversion of a lot of these mall spaces. For the moment, another stopgap is that they'll take chunks of the parking lot and they'll put restaurants or small stores that seem to be surviving out there in the world, and they'll make room for them. In the case of our mall, they just put in a Big Daddy and a Tokyo Joe's, like we really needed them desperately. And it's somewhat desperate because the rules are so tight, cut and dry for each store, how many parking spaces you need per average per store footage and all that. The parking spaces are very precisely determined, but so many of the malls are sort of digging up and they're allowing smaller stores to locate outside the mall.
Is that going to be the big trend, trying to find something to take up all that parking space up?
Not so much the parking space. It's really just generating a few extra nickels and dimes so that they can keep the malls afloat. They're just looking desperately for additional sources of revenue. But at a higher level, all the players in the mall business, they're all kind of looking for the exits, and the crash is really there in terms of, or it's just about there, in terms of the refinancing deals, the markdowns that are occurring on these mall properties. And again, we've got the market, stock market, completely oblivious to enormous realities like that one.
Rick, is there anything else you wanted to add to today's show?
Well, we talked about this inflation-deflation question, and someone this morning pointed me to an ETF, an exchange-traded fund, that actually tracks inflation expectations. It turns out that these days you can place a bet down on pretty much any proposition. So this one, I can only say that it has stopped just pennies shy of a key threshold at 29.61. It's currently trading 28.92. And if it were to pop above that 29.61, presumably bound for a target much higher at 31.34, well, I'd have to be an inflationist myself. But right now, it's very much that the chart is saying the jury is out. You better not even try to make a prediction. But as I mentioned earlier, I'm very skeptical that we could have any significant inflation in an economy that is so hugely encumbered by debt.
And even if President Trump is successful in bringing some factories back to the U.S., would that be enough to offset this decline in retail?
You got to think there's an offset for everything that we do, and of course, if we bring more consumption and manufacturing back to domestically, it means that our trading partners are going to sell less to us, and it's going to weaken their economies. And it's not like the U.S. will be in a vacuum where everything's all right because we're all just kind of doing each other's nails and cutting each other's hair and buying each other's, buying all domestic product. So for the UN, there's no question that Trump intends to, strengthen the domestic economy. But you have to realize that will be at the expense of our trading partners, who are some of them pretty shaky to begin with.
And I noted, too, that the U.S. trade deficit was up. So if you're not going to help out those people, where do you sell your products?
Right. That's true. I mean, it's kind of a beggar thy neighbor. And if we're going to be pulling production in, just getting more manufacturing in this country, more consumption, we're going to face a world that's less friendly to buying U.S. products, or less inclined to buy them.
Rick, thank you so much for chatting with us.
Thank you, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.